Okay, let's do this. Now, in this session, yes, I said we're going to be talking about being proactive as a trader, but before we go into that, I want to show you what bigger picture thinking looks like. So, what we have in the markets right now is that there's a lot of hysteria. I mean, I was on LinkedIn last night, I was just commenting all over the place because you see so many people quoting the VIX. The VIX is an indicator for volatility. um, People mentioning the record unemployment numbers, saying that the world's going to hell and that it's going to be really bad and a massive recession is coming and blah blah blah. And then I would ask these people who would say that the most basic question of how do you know? What these people are doing is they're being reactive towards what's happening. So America kills Iranian general. What does the news do? Oh, there is a really high chance of a war in the Middle East. America's sending troops. Iran's going to retaliate. Oil's going to go up. Blah, blah, blah. This is what we were hearing when that was happening. And what does this do? This is not what does this do, but what is that? That's reactive stuff. Without going into details, they just react. Record unemployment. Yes, record unemployment. Okay, sure, that's fine. But why is it? Well, if we take the normal approach, we understand that, okay, it's basically a one-off kind of deal because this is literally the first time in modern and possibly in world history that we have worldwide lockdowns because of a virus. So when we take the cause and effect relationship, which every trader must understand, we get the basic idea that that is happening because of X. So let's do this like this. Cause and effect works like this. We have a cause, which is X, plus, well, cause equals effect, right? So let's do C equals E. And that is what we end up, and that's reality. Okay, so if we remove or change the cause, then the effect becomes different and the reality becomes different. So let's do it like this. The cause is coronavirus. The effect is lockdowns, which brings us to the reality of people signing up for unemployment because they're not working. So in the meantime, if we take all the, well, plus facts of massive amounts of QE, massive amounts of money coming into the markets, easily accessible loans, not just to major corporations, but to the whole world pretty much, what do we have with newfound money? We get, first of all, when we remove C, we get normality back, right? Which brings a lot of money, which equals prosperity. Okay? So the markets, we are due, as soon as this thing's over, using basic knowledge, not me trying to predict something. I'm not even telling you where anything's going to go. All I'm saying is that there is going to be massive prosperity because of this. Because what's happening now? People are stuck in their homes. Nobody's working. Some people are getting paid. Other people are getting unemployment benefits and so forth. And that will only result in what? People very eager to learn, to earn, to work. People are resting. Imagine being in a socialist country. I'm going to tell you this from not from direct experience, but from direct understanding of history. Yugoslavia, which is where I was born, Serbia, was a socialist country. Not a communist country, a socialist country. Socialism required every single person to not work for 30 days. Okay? Once a year, you don't work for 30 days, you're getting paid, no matter what. You can be the janitor, you can be the CEO, you can be the general, you can be whoever you want to be. 30 days off every single year, paid. That's what many people have right now. And I'm not going to get into that, but all I'm telling you is the cause and effect relationship to what's going on is pretty simple. I'll tell you first of all the VIX. The VIX is up, which is the volatility index. It's up because of what? Because of the virus, right? Not because of a potential war, not because of natural disasters, not because of a comet coming to hit the world. It's up because of a virus. That virus, just like the swine flu virus, Ebola, Black Death, and every single other virus out there, it's gonna go away. And if we just look at the facts of the virus, it's not that bad. The last thing I want to go over is Italy. This is my own self-observation and opinion. I don't want to insult anyone in any kind of way or get anybody upset about what I'm about to say. But Italy has for decades had a massive economic problem. Their numbers are incredibly out of proportion towards what's happening everywhere else in the world. Now, some might say China is a communist country, they're not reporting the numbers correctly, blah, blah, blah. I'll just use the facts of death. Italy, massive, just crazy. But with that craziness also comes a lot of relief, financial support, not only from the EU, but from China, from Russia, from all over the place. They also have a history of having a really bad government, a government that's fraudulent, a government that's stealing, misleading, and so forth. We've seen it. We've seen their, prime minister dating prostitutes, dating models, making babies left, right, and center. And to really believe what they're saying and not believe, let's say, what China's saying is pretty crazy. Just the fact that they're getting a crazy amount of money for what's going on just makes me think, hey, maybe they're just, everyone who has the virus but dies of a car accident gets on that list. Everyone who has the virus and dies of a heart attack gets on that list. And, well, because I'm the kind of guy that doesn't pull stuff out of his ass, check what their health minister said. They said that that is exactly how they're putting the death numbers. Okay? If you have the virus and you die, not from the virus or from whatever the fuck else, you get put on this list. It's not me saying it, it's their Ministry of Health saying it. You get it? So, like the video I shared in the community today of that dude speaking about the virus is the F, it's fear. And that fear will die out soon. And the newfound hope, which is coming from massive loans from everyone else and from people resting and not working and being full of fear right now, it's all going to remove. And believe me, the 20s are going to bring massive prosperity, but they're going to create a massive bubble. So the 30s are probably going to be crazy. So bringing on to that, what do you see here? This is GBP USD 4-hour chart. And in the news and social media and whatever trading blog you're checking, when this was happening here, everybody was going, oh my God, the dollar, the dollar, the dollar, the dollar, right? The dollar. But let's look at the bigger picture. And the even bigger picture. Okay? This was a big move. This is not a big move. That's 32.7%. That's 9.6%. Now let me bring you another perspective here, just for you to understand that everything in the market is correlated and the charts tell us what will be happening. Bitcoin's in a nice profit, the sell side. So check this out. We have a pretty important support level, right? We have a massive rejection candle. We have our favorite contraction here, right? Leading to a key level. We have a breakout. We have a massive rejection, indicating to us that, boom, GBP USD is going to start traveling towards the upside. And if we just use basic support and resistance levels, we'll see that this was a normal move coming, right from this rejection here, all the way down. We have a breakout, we have a retest, we have a massive rejection candle that ends in 2 days. And based on what we see on the 4-hour chart, 1-hour chart, 10-minute chart, and so forth, we see that there's all the reasons for GBP to go up against the dollar, which means the dollar is weakening. Even though the Prime Minister of the UK is affected with the coronavirus, this is going to go up. Now, if we've seen anything in recent times of what's happening with the financial markets, we've seen Bitcoin go down, we've seen gold go down, we've seen indices go down, we have seen silver go down, oil go down, we've seen everything that could be classified as a potential safe haven, including the Japanese yen, go down. And what was the safe haven? The USD. During these crazy times of massive interventions from the central banks, the virus spreading like crazy and Italy going, ooh, hoo, hoo, the only safe haven was the dollar. What do you see here? You see a massive rejection of the dollar in the monthly chart. See that? Even the Canadian dollar, which is getting killed, my friends, absolutely smashed by oil, is actually facing a massive rejection right at the key level in the monthly chart. What else should I go over? USD JPY? Sure, let's do that too. Massive rejection. See that? AUD USD, which was getting trashed because of the bad things that are happening in China, which by the way, the Chinese are coming right back up. We have a massive rejection right at the key level, which by the way, if everybody just relaxes and focuses on the most important things that the markets are providing us, is indicating to us that, first of all, this move was way much bigger, 38 point something percent. Sure, this is 1, 2, 3, 4 months, and this is just 1 month. But AUD USD is coming right out of a major rejection level. And if I start digging into this a little bit more, we'll really understand that, well, AUD is going to rise based on the monthly charts. I'm not going to say where it's going to go, but I'm just using basic knowledge here to understand that we're coming off a key level. We're nowhere near the lows, the overall lows. We're in fact quite far away, and we're using this very important support level to come off. Now, this session, for all of you that have missed the beginning, I'm going to upload it to YouTube later on so you understand what I'm talking about right now, but you'll catch up. So what am I telling you? I'm telling you that the USD has been a safe haven during these crazy times. It has been the only asset that's actually gained well, not drastically, but gained overall. And you can see even gold has dropped, right? We all know this, but what is happening here? Check out gold. Gold is actually up for the month, right? Massive rejection candle, indicating that we are only beginning a decent bullish run here. Possibly we'll find resistance up here and probably go right back down, because all of this coronavirus stuff, it's going to die out. It's just a massive hysteria by the media. And, and it's not me saying it. It's just using basic history lessons and understanding how this whole virus is actually affecting the world. It's not that bad as the media makes it out to be. In fact, swine flu has been pretty much worse than this. I even had swine flu. My brother had swine flu. My mom, everybody had swine flu. It wasn't a big deal. It also had massive complications, and hundreds of thousands of people died, if you guys remember, over 250,000. They even stopped counting at one point because, yeah, it was just a virus. So I'm not going to get into that, but let's talk about being proactive. And the whole reason I'm telling you all of this little story here is the fact that I want you to be proactive, because when you start getting reactive, that's when you start losing money. And that's when you start making mistakes. So what I want to bring your attention to is this little document file here. And I'm going to go over what you see. Let it just load and explain to you guys what this whole little session is about. So the first thing you see is that being proactive to the charts, or price action, is essentially a winning principle, which is used by many traders, especially the rich ones. When I say rich, I'm talking about successful. And the idea of being proactive is very simple. You let price action give you the signals to go long or to go short, and not your thoughts or ideas, because your thinking patterns are based on being reactive. You don't want to be reactive. You actually want to be proactive to what's going on, and that's exactly how you're actually going to create success. Trading based on what price action should be, that's being reactive, is actually wishful thinking. Basically, what I'm telling you is the USD is a safe haven. Bitcoin is severely oversold, let's say, and people say it should go up. I've heard many people say this. Bitcoin is really oversold and it should go up, right? A lot of people have said that, and you see it, even the people who are dealing with Bitcoin, buying it and selling it. I have a guy who's in Belgrade, and this guy has been, really quick story. This guy basically is that middle guy that you give him Bitcoins and he gives you cash and he puts a markup on it. You get it? He's like a little bank. And he's been telling me, oh no, Bitcoin's going to be going up forever. And when the financial crisis hits, which is coming, which everyone has been saying for a long time that it's coming. But the one thing that people have in common when they try to predict crashes and financial crises and recessions is that they're never right. So the fact that I've seen so many people say that the recession is coming and the Great Depression is coming just because it happened 100 years ago. Well, not 100 years ago yet. It could be coming in the 30s if you base it on 100 years. As soon as they started saying that, I reversed my idea and I said, you know what? We're going to have great prosperity. It's coming. And mark my words, it's actually coming. And massive prosperity is coming. And how am I even deciding this? I'm putting ABC together. A is what? The economy just went down, dipped down, right? Why? Because everything's shut down. Okay? So when all of this stuff, businesses, manufacturers, service providers open up, you're going to see a massive correction in employment, in manufacturing, in all the CPI data, both the manufacturing and the PMI data, everything's going to go up because everything's going to open up. If you guys haven't seen the Chinese market, the Chinese stock market is the only one that's up. Why? Because they dealt with the crisis, and they're only going to continue going up drastically when everything opens up normally. So how am I coming to the conclusion again? One is that everything closed because of the virus. Remove the virus or deal with the virus, and everything starts opening up. The economy starts flourishing. But what has happened in the meantime? What have the central banks done? They provide you with a lot of terminologies that are hard to understand. But a simple Google definition search helps you understand what they're doing. And what are they doing? They've injected trillions of dollars into the economy, which indicates that they're not going to let the markets drop. Okay? You've seen the US 30 or the Dow Jones and everything else massively drop, right? Let's check the monthly chart. It's dropped, right? Biggest crowd. Oh my God, it's so quick. But they prepared for it. They put the limit downs, okay? They blocked it. If they didn't put those locks, yes, the drops could have been bigger. But check this out. We're using this specific level as a rejection zone. The month's not over yet, by the way. There's two more trading days for the month to be over, and we will probably see an even bigger correction in this. Now, when everything opens up, this is not a recession. Even though the media and everybody is, saying all this crap, it's not a recession because the only reason these things are happening is because shops, businesses, factories are closed. Man, we got to use our common sense here. So what will happen when everything opens up? The companies, they start working, manufacturing goes up clearly because there's going to be a lot of demand. I mean, just the fast-moving goods industry, which is, washing powders, toilet paper, all of these other things that people use on a daily basis, shampoos and blah, blah, blah. The manufacturing for that is going to drastically pick up. They're even going to have to hire extra staff to keep up with the demand for everything. We got to use our common sense. We are going to experience a massive, massive boom in the industry. We're already too late to buy some stocks. Thankfully, I bought a bunch on Friday, a lot of very cheap stocks. So that's one thing. The second thing is the central banks. They've injected massive amounts into the economy. What else did they do? The governments have told the banks, we will help you, don't worry, give out loans. Go crazy. You won't go bust, we'll help you. So what's going to happen? You have a crazy amount of money coming into institutions, corporations, everywhere from loans. Now, what do people do when they get loans? They start spending, right? So the economy is going to start moving fast. They start investing into stocks, into this, into that. So just to keep this all short so I can go into the charts, we're going to experience a boom. And if you just focus on the big picture, you understand what's actually happening. We missed the low. We absolutely missed the low. But we didn't miss specific indications of the markets. On the short-term side, the market has already provided us with specific information that it could go up, and it should be going up. But we need to be very selective here. There could be one more downswing before we go on the upswing, right? I don't know that because I'm not the type of trader that focuses on trading what's actually going on. I like to trade specific two patterns, and those specific two patterns have been there the whole time. For example, you've all seen them. Who is a part of this community, we've seen this happen on the DAX already. We had a beautiful indication to sell, and there it is. That beautiful top side there, that contraction. Trade two patterns, contraction. There it is, followed by free higher highs connected with the trend line. And there it is. And there is the boom. Slowly but surely went down. Now, we don't have a contraction for the upside yet, but we also have massive rejections. I need to remove everything. And those rejections are coming out of key levels. You see this? So what happened? You see this here? This is 2015, right there. This is a major problem. Also double top on the monthly. So clearly it was due. You see that right there? It was clearly due. This drop, the charts already told us it's coming. Trade what you see. That's what I mean by this here. One sec. Trade what you see. Trade what you see. It was there the whole time. It told us this is what's going to happen. But just like it told us that this is going to happen, it's also telling us that this level here is a massive rejection level. If we focus on the short-term charts, yes, it all looks scary and that price action is showing that it should continue going down and blah, 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 but it won't. And I told you the reasons. Remove the virus and everything goes back to normal, but this time on steroids, because now the economy has, I mean, just the US has put like what, 2 trillion on Friday or Saturday, and before that 200 billion, 300 billion, 700 billion. Add all of that up and add up the Japanese guys, the Chinese guys, the Australian guys, the South African guys, the fucking Belarusian guys, and everyone else. You're looking at massive amounts of money. What is that going to do to the economy? It's going to basically create a bubble, but it's an economy on steroids now. And if we base it on history, sure, 100 years ago, yes, we did have the Spanish flu. But if you look into the Spanish flu as well, it wasn't that, I mean, it was bad, but it wasn't because of one virus. The reason there were so many deaths is because they were crowding up people. Just Google it a little bit. They were putting hundreds of people into one little room with no fresh air, with no sunlight. People were dying of other diseases, which was proven to be a fact a couple of years later. And they even realized, so they started putting tents outside in the summer and putting people out in the sun and into the fresh air. And boom, it was all gone and fixed. A couple of little recessions happened in the 20s. We didn't have central banks to inject the economy with money like we do now, but the 20s were a time of massive prosperity. The stock market bubble grew big and strong and fast. Everybody became very rich very quickly, and there was a party. You can watch the movie The Great Gatsby to understand how crazy it was, because it was true. Everybody was rich, especially in the States. And then came the Great Depression. So if we base it on numbers, yeah, maybe something similar could happen. So anyway, I'm done explaining about being proactive to the news right now. So let's go over being proactive to the charts. So before that, I want to go over just a few basic essential trading rules. And these are my trading rules that I use. The first one is to trade only 2 patterns, and that's it. The contraction, the continuation. 2, don't stack or overexpose your positions. You can never know when you're right. Because trading is a game of probabilities and not certainties. No matter how great this double top looks like, see that? There was a pretty big ass spike before it went down, a 6.25% spike before it started going down. And throughout this candle, it has probably made plenty of 2, 3, 4, 5% spikes to the upside before it went down. So no matter how correct you might be that this is a double top and that the price should go down, you could have gone bust 100 times before you made that one correct trade. So hence the reason, don't overexpose, don't stack. Find those patterns that work for you. For me and my community, it is the 2 basic patterns which need to be learned by everyone like full force. Number 3 is wait for a valid confirmation, and generally that comes from a candle close. Since we're generally mostly focused on day trading, wait to grab that right confirmation. And that PDF that I shared with everyone, you guys know it, this thing here, kind of helps you. But the other PDF, the bigger one, this one here, where is it? Education, ebooks and more. This PDF right here, entry process, actually shows you screenshots of what you should be looking for. Number 4, trade what you see, not what you think. Listen, we can think million things can happen, and generally we might get something right, but that doesn't work, and that doesn't make us money in the financial markets. What does is to trade what we see. It's all about price action. Believe me, I'm a great fundamental analyst. I'm probably really high up there when it comes to making some really crazy predictions in the financial markets by reading data. Um, and that has helped me a lot. But the most money I ever made was trade what you see, the charts. Number 5 is a pretty basic one. Nothing to trade, trade nothing. Essentially, you do not have to be in a position every time you scout the markets. So let me ask you a question, which just answer it mentally. When was the last time you opened your charts, sat down, ready to trade, and you opened the trade? Sorry, you didn't open a trade. I think that's like never. Because most people, they want to be in the action. But when you have a set of criteria looking for a specific trade, this thing here helps with that. And waiting to trade something, and when there is nothing to trade, you trade nothing, then believe me, you're literally in that top 1%. When you follow this basic rule, nothing to trade, trade nothing. Because the market is always going to give you a trade, just maybe not right now, but it could in the next 20 minutes or in 40 minutes or in 2 hours. So essentially what I'm telling you is that to be a successful trader, you don't have to be in a position every time. Try and become more selective into finding those trades. And number 6, finally, is for me, is focus on profits per session. So I'm going to show you how we're going to be reactive to the charts. I'll start with Bitcoin Euro because I got a short position there. It's doing okay for me right now. Let me show you. So I entered the trade based on this bearish continuation, which is, so I'm going to clean it up. You see that I've got a trade. You guys, people in community know about it. So I'm going to remove everything and I'll show you. So I've done my multiple time frame analysis here by taking this bottom right there and doing this. So I got my support. This is Bitcoin versus Euro. I've got my support. I got my support. I got my support, and I got my breakout. Right? Now, that support led to a resistance from this bottom to this top where price action broke out, and it gave me the 38.2. And that 38.2 is my trade entry, what's it called, indicator. But clearly I didn't see this, right? I'm not going to tell you, oh, I entered right at the top. I'm not that kind of guy. I entered late, but I entered well. So yeah, this is giving me an indication that, well, price action should continue going down. But it doesn't mean that it's going to make new lows and stuff, because what I am to the market is proactive. I say it could come here, right? It could even go down here, 235. It could go to 1,000. It could go anywhere. I don't know where it's going to go. That's the whole point. Especially on longer term charts, I hate predicting that stuff because I'm not the kind of trader that likes to stay in a trade for weeks. I like to get into this trade and make my money now. So I'll show you how I found my actual reality take profit. So it's better seen on my C trader, but this is how I did it. I used the 61. So I'm going to clean everything again. And I found my short-term profit target by taking this bottom, taking this level right there. Sorry, this bottom. Oh my God, my dog's killing me. Killing me. She just farted and it's absolutely disgusting. So yeah, so I'll take this level right there. We have this resistance. We take this bottom right here and we have this support. And what I have here is another bearish continuation, right? So I have another bearish continuation. Let me just see how I did this properly. So I took this break, and that's her snoring as well. So this resistance with this support, so that's my high, that's my low. There's my 61.8 right there. And that was the indication. Based on this, this is a continuation pattern because price is contracting. We seem to have a breakout, but we're not out in the clear yet because price action needs to break this level. And we can't yet, you see? 29 minutes to go. Maybe we will, maybe we won't. We'll see. But based on this, I've taken my short at the top right there, somewhere around here, and my take profits right there. My stop loss is above the 61.8 and my take profits down here. And that's me being reactive. Now, if I see that price action is finding a decent support at this level, I might cut my trade, because so far, right there is a pretty important level. You can see price action using this level. Firstly, we have a massive rejection right there. Support, support, rejection, support, and we're here now. So the main thing that I'm looking for is the time factor. But at primetraders.com, this is what we teach people. I just went on a random chart. So I released a video today about drawing key levels, and I'll show you that right now. I'm gonna just focus on the current price action. I'll take the top here. I'll take the bottom. I'll find the next bottom, and I'll find the key levels on the 4-hour chart. I'll even take this one into account. The key levels are created when price action hits a level and creates a move against it, okay? Such as this here, okay? And creates a straight dogecoin line. Moving down to the 1-hour chart, now I get to see much more levels, and I'll start from here. I'll go down here, I'll take this level, and I'll show you why. So I don't want to take this level here because price action tapped that level, but this was the actual support, because what we have here is a rejection, 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 breakout, resistance. You see that? Right there, resistance, and we continue moving down. So we will continue drawing the levels. We'll get this one here. So I'm only touching the levels where price action tapped, by the way. So we have this support, we have the breakout, we have the push up, we have the next push up, resistance. We have resistance. Come on, buddy. Resistance, 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 resistance. You see it. It's so easy to find support and resistance levels using this. But this doesn't justify the trade for me, right? This doesn't mean that I'm just going to short because it comes here or go long because it breaks this level. What I'm looking for is specific patterns and indications. So essentially what we do at Prime Traders is we look for a pattern. And where are those beautiful patterns found? 10 minutes. They're the most beautiful patterns because, why? Well, because they're the quickest to find profits on. So let's focus on the current price action here. And I'm going to remove absolutely everything. I'm just going to show you how I would do it on the 10-minute, even though I would want to have a clear support level based on the 1-hour and the 4-hour charts. Okay? So check this out. I'm going to find the key level where price action finds a support. Well, here we have a clear contraction indication of a possible reversal happening. It's not really a valid contraction, I would say, because the base is wrong. So I'm not going to focus on that. But I will find something. Yeah, here we go. So we have this support, and then we have a clear little, let's say even like this or like this, a nice little bullish continuation pattern. Now, the best way to find this is to take the top and to get the push from the bottom from right here. And we see that price action is nowhere near 61.8 as well, giving me a strong indication that price action could create a bullish push. Essentially, I would probably target this level here, maybe. Let's see. The first low. Yeah, the first low right there. And then we get 61.8. And we can see that price action is trying to push as well to the next support level. But a trade is not entered until we don't have a contracting of price, either as a continuation or either as a reversal. So let's go to Euro USD quickly and see that beauty of a trade that we had on Friday. So we have a gorgeous little contraction here. Check this out. There's a contraction right there. Beautiful, even on the 5-minute and the 10-minute. A gorgeous contraction of price. And I want to find there was one more. Then we have a continuation. And now this is important for anybody in the community trying to learn this. Look, you have a key level and we have a resistance, okay? But you have the contracting of price action. this increases the probability that this key level will be broken. Highly increases the probability of that happening. Okay? Just like here, you have the breakout of the contraction, and you have this support level right there, and price action is pretty much coming to it and creating a potential little contraction of price right at that level. As soon as you have the breakout, that's your under indication to go long. And you see that over and over and over and over and over again. But if I come down to the 1 hour chart here, I really want to show you the beautiful other pattern that you can find in case you want to go 1 hour. So there is a contraction right there, same contraction, but this time you have a much better signal. What do you have? You have a beautiful little pin bar right there. See? And if I take this level here, boom, pin bar touching right that level. See that? So this is a support. It gets broken. There's the resistance. We break this level, and this time we create plenty of little rejections. These rejections here indicate that this level here is just a gorgeous buying zone. And now you connect it because you don't have a pattern here on the 1 hour, but you come back to the markets and you see this. And then there's your confirmation to go long. It's a pretty simple confirmation. And then all I can do as well to increase the odds and find my take profit is take the bottom and the top of the recent price action swing down, which is this here, to the swing up. So the low and the high, you get 38.2, rejection right there. Price action goes up. Where are your take profits? You guys know that. 123.6 and 161.8. You never know which take profit's gonna get hit, so that's why you become proactive to the charts. You zoom in and you start focusing on what you actually see. But you can also connect key levels to this whole mix. So you have this level here, you have this level here, and you can see that level being a rejection right there 2 times, then breakout. It was a basic support, it broke out. Here it broke out, continued to the upside, and basically we have nothing else that's important in recent price action. We do, of course, have this level here, but that's not a major one. It has been used here, here, and here, but it's not a major one right now. But clearly, an easy, really easy setup. Thankfully, we traded this, and look at that, 151 pips. Now, it's easy to say you could have made 151 pips because you don't know till where you're gonna hold because the price action, I mean, it can create reversal patterns. Thankfully, this one here didn't. This one just kept creating bullish continuations after it broke out, such as this one here. And Phil spotted this. And check this out. I'm gonna take the top. Let me just clean up everything. I'm gonna take the top. I'm gonna take the bottom. No, we have nothing. Oh, sorry, it's from here. No, we still have nothing. So this didn't work that well in terms of the fibs, but boom, a gorgeous little continuation contraction right below the 13 EMA and continuing up. And then guess what? You get another one right there. Price action stagnating. This is not, but this is, and continuing upwards. Now we might have a reversal contraction on the 10-minute too, forming now, but I think that possibly could just be a nice little reversal right to the key level right here. I don't want to make such calls before the market opens, but you can see that the 30% lines up from top to bottom of the contraction to this level. So it could be a rejection level. That's pretty much it. Everything in about 40 minutes. I went over a lot of information. I don't have the exact time to go over everything. I got some KFC waiting for me downstairs, so I want to go and eat that. Tomorrow we go live for every session. So that's London and New York. And I'll see you guys later, I guess. That's pretty much it. If you guys have any questions, you know how to reach out to me. Feel free to shoot me a message. And I'm going to upload this video to the Prime Traders YouTube channel in case of anybody who missed the beginning of it to understand exactly what we're talking about. Thank you very much for attending. May you all be happy, healthy, and successful. And my regards to you all. I'm going to end this session. Thank you and see you later. Bye-bye.